Have you ever wondered why some traders excel while other traders struggle to make consistent profits? It all comes down to one key factor: trading psychology. Trading psychology refers to the mindset and emotions that influence our trading decisions. It's like a game of chess, where you need to master your own mind to outsmart the market. Fear and greed are two common emotions that can hinder your success as a trader. Fear of losing money can prevent you from taking the necessary risks, while greed can cloud your judgment and lead to impulsive decision making. To become a successful trader, you must learn to control your emotions and adapt a disciplined approach. This means sticking to a well-defined trading plan and not letting short-term frustrations sway your decisions. Visualization is a powerful technique used by top traders by mentally rehearsing successful trades and envisioning the desired outcome. With this, you can program your mind for success. Another important aspect of trading psychology is managing risks. Successful traders know how to limit their losses and protect their capital. They understand that preserving capital is equally important as making profits. Having a strong mindset is crucial during a period of market volatility. Instead of panicking, successful traders use this opportunity to thrive. They remain calm, focused, and adapt their strategy to the changing market conditions. Lastly, it's important to remember that trading is not a game of luck, but a skill that can be mastered. It requires time, effort, and continuous learning. Surround yourself with knowledgeable mentors and fellow traders to excel your progress. Thank you for watching The Mindset Game, Mastering Trading Psychology for Success. Be sure to subscribe to our channel for more valuable insight and strategies to become a successful trader. Cheers.